Traders, we're back. We're talking about AMC. I'm going to get straight to the point, straight to the juicy content. We're going to be covering the volume, what happened with the price action pushing down today. We didn't quite get that push down to $52. However, we did get pushed to the high 52s and the lower 53s. And I want to address where I'm looking for options personally on this stock and kind of the longevity of what's going on with the volume and how this can influence the price action in the coming weeks as well. So let's not waste any more time. Like, subscribe, do what you got to do. Let's get to it.
Don't got enough to go cop it. I'm about to take off like a rocket. Houston, we might have a
Okay, so the first one we're looking at is going to be the overall volume. Now, we've gone over this quite a bit here on the channel, and I'm probably going to go over it every single day because this is going to be the key indicator to tell you when more people are getting back into AMC, when there's more buyers coming in, when people are buying big supports, things like that, because I want to address a few of those things right now when we start getting into the charts specifically. But volume's a pretty big indicator. Now, people are going to say, Tyler, do you need volume to break out? Not necessarily. We've seen bigger pushes to around $64 with little to no volume as well, but I'm going to tell you that's when you're going to see massive changes in the IV, which is going to make those options really start to make the most bang for your buck. So you're going to want to watch this volume, but right now what you are seeing is normal. You start to see a pretty big peak up, and then you start to consolidate, and we have been consolidating around $52 to $64 over the past 2-3 weeks. And honestly, right now you're seeing a low volume, but we're still holding this range. That's very good overall to see. We kind of saw the same movement. I've been comparing this back to March and April. It's the same exact movement that we had from 11 down to about $8.50. We trended in that range for over a month, and then we started to see that push back to the upside as we led back into May, which was led by several other indicators, mainly utilization, and the other being the short borrow fee, which we'll get into more here on the channel as well. But let's get into the chart. Okay, so really when I'm making these videos, I'm making them to the people that are getting really concerned with their positions, and then to the people that are looking for options, because me, I have my shares, and then I'm always looking for options to consistently make money on that side of the trading as well. So when you're looking here, this has been the key range that I've been looking to buy at, this zone, $52 to 51.5. Now, I mentioned yesterday, I did presume we'd probably get a little bit of a push down to that range if we started to push back down, and then we did. We had that flag yesterday, and then we pushed straight back down, but we bottomed out around $53 flat, and then we bounced back up to the daily and kind of trended sideways. Now, going into Monday, typically these are a bullish day, but the past 2 Mondays have been bearish. We've actually had some downturns on these past Mondays. So I don't project that we have a third bearish Monday in a row, although it could 110% happen. We'll have to see exactly how it plays out, but typically Mondays are strong days. But for me personally, I did not get any options because we did not hit this range here. That was my really big cue to buy those options because that was the safest spot for me personally. But I want to make something abundantly clear. Even though I'm saying, on the daily or the next 2 days, we might see some downside, the long-term viewpoint is still to the upside. That's why I still have and retain those shares. That's why I'm not selling those shares, because I still see upside in the foreseeable future. So I want that to be abundantly clear. When it comes to options, I'm always looking to take profits on this, and I'm grabbing far out of the money options as well. Yes, I know they're risky, but the full out of the money ones do not affect the underlying price 99% of the time. That's a really important factor to know because no one's going to be hedging for options that are $40 away from the strike price currently. Also, something we looked at yesterday was the OBV. I mentioned we were getting a pinching in this range, and we actually opened up today and dumped straight down through it. Now, this doesn't necessarily mean tons of people are selling off because we're still sitting in a locally very high range compared to where we were when we actually hit that $70 range the first time. So that's really important to know that this doesn't mean this is the end-all be-all. There's tons of people selling out. You can see the volume, it's extremely low. If people were selling, that volume would most likely ramp up as well, because either way, when you see volatility in either direction, that typically means more volume. So I want that to be known as well. And then you're actually seeing this is a very, very short move to the downside, if you will. Very small range. We've seen a lot bigger ranges on the downside here and here, so I'm not concerned there either. However, what I want to see here on the OBV, and what I would recommend that you take a look at going in the coming days and weeks for those options to maybe spot that next breakout is going to be some sideways consolidation. You might get a push to the upside a little bit, but come back down. But overall, you want to see just a sideways movement. Now, that doesn't mean that you can't see a little bit of downside. That just means overall, you want to trend in a little bit of a block when it comes to that OBV range. If you don't know what I mean by any type of block or block-based trading, then I recommend that you just hop into the live streams, because that's how I explain when I'm getting into price action and things like that as well. Price action isn't necessarily just the chart. It's how actually buying stuff based on the chart, where there's support and resistances all over the chart based on the actual price underlying on each stock. And I know I probably just blew a few of your minds. Now, what I want to point out about this chart right here is that it's the easiest thing to notice when you're kind of switching the short-term trend on AMC. As you can see, once we hit this weekly level up here, you started to trend sideways down and you just remained underneath VWAP. Every time you're pushing below VWAP on about the 15-minute and holding below VWAP on the 15-minute, you're typically switching the trend. Whether that means you're pushing to the upside, pushing to the downside. Of the whole move we had from about $20 all the way up to $70, you remained relatively a sizable chunk above that VWAP. There was a small window where you were right below it, but you consolidated basically on top of that line. Now, right now, you're seeing that we hit the weekly and then we immediately came back down and you just trended all the way back down to our bottom support. It's really as textbook as it gets when it comes to the trade on AMC. I love what I'm seeing, and it's making it very predictable, like I said in my last video, because everyone's just holding the stock. So essentially, in my opinion, what's moving this is primarily just day traders and things like that that are actually trading the actual stock. Now, people are like, Tyler, you're day trading it. That's not at all what I'm doing. I'm swinging these options. That's the very important thing to know. And if you're worried about affecting the movement or, tarnishing the ape community, you should know that when you're buying these far out of the money calls, and I do want you to know they're extremely risky and you should never be greedy with them. Not financial advice, do your own DD. But the far out of the money options do not affect the price, because nobody is hedging for a $100 strike while the price is sitting near $50, $60. It logically does not make sense. It's just a fundamental viewpoint. Overall, looking at AMC, I didn't like exactly what I was saying today, and I didn't like an entry point for today for options. Now, I think if you had options and you got them around the $53 range, that's a decent spot, and I wouldn't really mind them, but I'm staying pretty convicted to my entry points, enter around $51, $52 every single time now. There is no reason to rush these plays because you're constantly seeing mad wicking on the up and the downside. So the best thing to do is buy where there's the least amount of risk possible. And we're saying this is overall about a triple bottom at this point right now. So I'm going to keep buying where the hard support is. And then maybe, just maybe, you might catch a massive bounce to the upside if the volume starts to kick back in as well. But even if that volume doesn't kick in, you're still getting those pushes to the weekly, the daily opens almost every single day. So there's a good chunk of change you can make on the option side of it, but you got to be very careful when it comes to options. I do recommend you are extremely careful when it comes to trading options. So like, subscribe, do what you got to do. We'll be live here in a little bit, but namaste.
Like a rocket. Houston, we might have a problem, but that don't mean money will solve them.